So right now, in terms of market context on the S&P here, so right now the buyers have held it together really well. And this is something that I've mentioned over the last couple of days, if you remember on the E-mini player site, that we didn't want to get overly bearish too soon. That's something I talked about yesterday, that I think it would be a mistake to get overly bearish on the market too soon, thinking, oh, now we're, definitely heading lower or something. This balance has still held. I think if we start breaking down below this balance area, you know, then things could change on the intermediate time frame. But so far, the buy side has just been so resilient, and there hasn't been any follow through really on the downside. Not to say that eventually it can't happen, but so far it hasn't happened. We had a high volume node at 27.31.5, which shifted up into 27.85 today. So that's going to be an important level, I think, to just keep an eye on. 27.85. Are we holding above that level? Are we not? On the downside, I think 27.74 to 76 is going to be a interesting area, and we'll be watching to see if that holds. But really, instead of coming into it with a kind of a preconceived or just kind of an internal bias, simply allow the market to show you evidence, show you signs, and go with it, right? Like take it at face value instead of trying to think, oh, this is a fake bounce, or this is, like I hear it all the time, right? That this is not real. It's not going to continue. For some reason people hate this rally. Just go with it. Like why try to come into it with, some bearish view because of North Korea or, what's happening with the presidency or, investigations. Like it's all noise, right? It doesn't really matter. Just go with what the market is actually communicating. And so far, what it seems to be communicating is that it is super resilient. Buyers have stepped in every single time there's been a pullback. If you look at just, the price action over the last couple of months here, every time there's been a pullback, buyers have been ready and willing to jump in and buy, with both hands, right? So until that behavior changes, until we start seeing some real panic in the markets, we can't really be bearish. Now a lot of days we're going to be neutral because the market might be overextended into resistance or into support. And that's the right call to make. Like today, intermediate bias was neutral. And because we're still range bound, sellers stepped in over here, but look, that was major resistance. That was expected, right? We were expecting sellers to step in there. It's not like they stepped in at some price that makes no sense. It's not like they even stepped in, way ahead of strong resistance. I mean, this is larger time frame resistance. We've had it on the chart for weeks or maybe even months now, and the market's overextended into it. So first time up, you would expect some level of profit taking, right? Anyone who's accumulating a position or went long anywhere over the last several weeks sees this resistance too. And it makes sense to take some profit. So fine, we saw that, right? We were expecting that. That of course, it's big resistance, so there's probably going to be a response at that big resistance. But that doesn't mean that all of a sudden, okay, let's go super bearish, right? Because overall the trend has been to the upside for the past couple of months here. This balance above 63, 66, it's holding so far. Today we got to move down into the high volume node of the balance, which was 75.5 at the time, and buyers stepped in there. So there just really hasn't been any follow through on the downside just yet. I do think, as day traders, we always have to be pretty flexible day to day. But right now, in terms of the intermediate term, it just hasn't flipped. It's still going to be either neutral or even neutral bullish at this point. And until we see some real panic in the markets, I wouldn't get overly bearish. Like when things change and longs really start to liquidate, it'll be obvious. Like you'll start seeing, minus 1,000, minus 1,200 on the ticks. You'll start seeing, big downside momentum, and you'll start seeing mediocre retracements to the upside. Characteristics of the market will totally change, and it will be super obvious when it happens. We don't have to predict it. There's no value in trying to predict it anyway, but we don't have to. So it's kind of a useless exercise to even try. When it happens, it'll be clear as day that, okay, things have changed. Now the sellers are being much more aggressive. The longs are being super cautious. You'll start to see mediocre bounces at support, big failures at resistance. The whole thing will change, but it hasn't happened yet. So for now, the buy side has maintained control on the larger time frame, on the intermediate time frame pretty well. And really, we're kind of dealing with this range-bound market, short term here. And on the upside, we expected a reaction. We got that. Now, if we start going back up, eventually we can process this area and still go higher, right? Who knows? I mean, let's be open to that idea. Instead of thinking, oh, that's it, market's topped out, we have to go lower. Let's just be open to, the market heading back up. And in order for it to head back up, we'll need to see participation in the other markets as well. We'll need to see some upside momentum come back into the market. If you look at, for example, today on the internals, I mean, you can see that there's some sustained upside momentum here, right? And even into the closing range, we don't really get any big downside momentum. On average, the tick is spending more time above zero. So all the characteristics are so far pointing to higher prices. They're pointing to a resilient and fairly strong market. And until that changes, we have to, we're open to short setups, but add good location, add good zones where at least there's potential for a good move. And right now, if heading into tomorrow, we continue holding above, the 27.85 to 27.90 area, and we start holding above today's high, I mean, that opens the door to revisit 28.11 to 14, and then start running into that bigger resistance again around 19 to 23, and going back up there, we can still get responses on the day time frame, but then the bigger pattern would start to suggest that, okay, we're kind of processing that area, and eventually if we keep knocking on it, we can even take it out. So that's kind of how things are looking to me right now on the larger time frame. And I think for that to change, we'd have to see a breakdown below these lows, right? So 27, let's say 61 to like 66 or something. We'd have to see a proper breakdown below that area, and then it would open the door to changing the intermediate term bias. Then it would become bearish, and then we could see at least some level of panic in the markets. But right now, like, there's so much support built up, there's not really any sign that's suggesting lower prices. So, but that's the view today. Things change day by day, and as day traders, that's actually the beauty of it, is that we can adjust our view as the market provides more info. All right, guys, that's a wrap for today. Thanks for the questions again. Enjoy your evening, and we'll talk to you same time next week. Good night.